Just recently, some major news for mortgages, for consumers, for your credit score, for some improvements that are here and that are on the way. This is a big deal because
Yeah.
while it was one of those topics that, depending on your loan program, lenders could overlook or they could ignore, or they could, kind of work around, it still impacted your score. So while lenders may look the other way and still qualify you, you were getting impacted from the sense of your interest rate or the cost to do the loan or your required down payment in order to get approved or things like that. And that is medical collections. That's the big topic today. So welcome into More Than Mortgage. I'm Chad, he's Zach. And medical collections just recently from the CFPB, they have said, guess what? Knock them off out of the credit report. No longer can the bureau. I didn't do that setting. I don't know what, but look at
Boy,
that, Zach. Look
you
at
are fancy, bro.
Man, they're ready too. They're ready for the medical collections to go away. It was a big, I told you it was a big deal. 4th of July and January. So the medical collections, CFPB says no more. They're out, they're done. The bureaus cannot report them any longer. And that when those disappear, that's going to increase your score. And so the key here is, and I'll shut up and let you run with it because I know you got thoughts on it. But the big deal here is that medical collections before, if they were in dispute or if they had a balance, things like that, medical collections would get ignored by lenders. Basically, they could say, we know it's there, but we're going to pretend like it's not. We don't see it. We understand medical stuff, yada, yada. All right, we can still get you approved. The problem is that even though lenders would ignore it, that could bring your score down
Yeah.
by 20, 50, 100 points, depending on what you had and how long it was outstanding and the balances and the neglection and all that stuff. So now that those are gone, well, lenders are still obviously going to ignore them because they're gone. However, now your score may have gone up, and this could get you a lower interest rate. It could get you to qualify with a lower down payment. It just make things easier for you all the way around and getting a better deal. But Zach, this was one that we've talked about other things and policies and the government and stepping in and trying to improve mortgages. This is a good one because this is going to truly help people
Right.
all the way around. And it's going to get rid of that nasty medical stuff.
It's one of those things, and obviously, medical insurance and payments and denial of claims, all pretty hot topics right now in American society. And Chad, it was always the most deserving people that I felt the worst about. It was the young couple who maybe had a shallow credit history, but it was good. They just didn't borrow money, and they go to the hospital, have some pregnancy delivery complications.
Yeah.
The bills are in dispute. The hospital's fighting with the insurance company about getting compensation. And in the meantime, you've got this growing family who has a new baby in the house and they want to come and get a mortgage. And without those medical collection situations hanging out there, pulling their score down, they would have been in fine shape. But because they had a little bit of shallower credit history, they might have, under normal circumstances, had a 680 credit score, but now they've got a 512 or a 560. They're out of contention. And so those were always the tragic stories that you look at this credit report and say, man, if it weren't for these medical collections, and it's very clearly not an issue of somebody trying to get by with not paying their medical bills. These were insurance disputes, etc. So this is a really good thing. I'm not often a fan of, the government machine and the policies that they put into place. They seem incomplete, but this is certainly one that we've been waiting for a long time. And I'm glad to see it finally come into vogue. And my hope is that it won't change the algorithm in other ways that create a riskier credit profile because they're trying to assume some of that risk that comes with medical collections. I hope that it's a true deletion. And in effect, what we see on our side, Chad, is that if those accounts aren't on there, they're just vaporized. So it's like exactly what happens when you've got a really good credit repair person, you had a derogatory credit event, it's no longer in your history, like it never even happened. So the
Yeah.
scores are going to immediately recover and immediately bounce. And there's not any waiting period, or if you hold your mouth right, then you might get some points. It's done.
It's
So
gone.
that's the greatest thing about this.
Yeah, and so here's the other thing with these medical collections. You bring up such a good example. The young family, limited credit already, pregnancy complications, life event, whatever. The other one that I hate, and this group of people wouldn't be, in that scenario, but I hate it when you have someone who's done well, and meaning like always paid their bills on time, always kept a good balance, never been a problem. Like you can't find anything wrong, right? And then randomly an $85 medical collection pops up on their credit report because this happened to me, because you move and they keep mailing the bill to the old address
The
and
missed
nobody ever
copay.
calls you. Right.
Yeah.
Nobody ever calls you and says,
Right.
"Hey, you owe us $85 and we've sent you 6 letters. What's going on?" Like you don't even get that. And you'd be surprised how many times it happens. You do see that. Like somebody who would have a 780 credit score has 715, and you may go, "Well, 715 is still good credit." It is good credit, but that's a big difference in rate.
Yep.
Like, trust me, Zach and I see that every day. That's a huge difference in
Huge.
interest rate between those points. And so I think that those little things, and anybody who's ever dealt with the credit bureaus, they know trying to get something small like that resolved and calling them and being like, "Are you guys kidding me? Like, I'm getting dinged over a $75 bill or an $80 bill that's a medical thing that I thought I paid or didn't know I owed." Like, getting that stuff corrected on credit, it's like steering the Titanic around the iceberg. It's
Right.
just not happening. And you can say you're going to do it and you can have all the ambition. Truth is, the bureaus are really difficult to work with. So, again, I'm with you. I'm not usually a big fan of the government policy stepping in and doing things. Like I was completely against and still am the LLPA adjustments that they did a couple years ago, year and a half ago, whenever that was. I think that's a horrible idea. I think that it's nothing but a polished turd, and they're trying to tell you how great something is, and it's not. This one, though, I'll give them a lot of credit
Yep.
because this right here helps people. And even if they already qualified for a house, just like the scenario I mentioned, you may have a 660 score because of medical stuff. Well, now you may have 720
Right.
once it goes away. The other thing people need to understand is on the qualifying side is that if you put the minimum down payment in and your score is impacted because of medical collections, you actually may not get approved because the underwriting certificate, that is an automated certificate, that underwriting cert may come back and say no. But again, medical collections go away, your score increases, nothing else changed. All of a sudden, that same borrower now qualifies with the minimum down.
That's a great point. Great
So
point.
it's improving interest rates because your credit goes up, which improves your rate because you go into a higher credit bucket. But it can also impact your cash to close because you're going from rates or approvals where the bare minimum isn't good enough to,
Mhm.
"Oh, you know what? We trust you now because
Right.
that medical thing's gone. Your score's higher. We're going to let you in at the minimum."
It's going to automatically increase the number of approvals, not just based on rate and payment. Yeah. Good
It'll
point.
also help. Rates in general are what's going to impact affordability, but this will also help affordability. Maybe not
Mhm.
moving the needle in a huge way, right? But it could legit save somebody a 1/4% on their rate,
Every
which,
little bit helps.
yeah,
Yeah.
40, $50, $60 a month. I
And
mean,
and mortgage insurance is affected by those scores in a very
right,
profound way. So now you've added another $37 a month because you've got a better score, and you're not being dinged by some silly unpaid copay at the dermatologist's office. That's a really good point, Chad, because I hadn't really thought about that piece of it. But we see those, especially, where you've got the insurance isn't giving good advice to the physician's office. They're not collecting a copay, and then suddenly there's a copay that's due. The borrower doesn't really know about that copay, and maybe they're going to 7 different specialists or 5 different specialists trying to address a particular issue, and so you stack those up, and the total bill between 4 different offices might not even be $500, but you got 5 medical collections and you just get hammered. And I do know, having worked in the medical field prior to being in the mortgage business, that there are situations where, bills got to be paid, payroll has to be made, office managers or physicians go into the back room to the accounts receivable gal and say, "Hey, listen, what do we got in accounts receivable?" And she says, "Well, we got, $18,000." And he says, "Call Fox. Fox is a local collection agency around here north of town. Call Fox and see what we can sell it for."
Yeah.
And so they sell it for 40 cents on the dollar, and they make payroll, or he gets to go to Aruba this month or whatever. And that's a sad commentary. And maybe it doesn't happen very much, but it does happen. And we're working in a society where incompetence and maybe a lack of work ethic is becoming more and more a peril of being in the workplace. And so things just aren't handled the way we would always have them be handled. And once they get in the collection system, so think about this, Chad, how many clients have you had that had, a collection that went from ABC collections to XYZ collections, to Fox collections, to Waterstone collections, to Watermark collections, to Mark Stone collections, to Mark Water Connect? Then you don't even know where the bill is, but you've got all this reporting on the credit report. It's gone.
So, not to empathize with the medical collection group here, but I do wonder, Zach, what is their recourse now? Because from a collection standpoint, that was always the fear, right? Hey, you don't do this. Yeah, you don't do this, I'm gonna slap it on your credit. You're gonna be screwed and you ever try to buy anything. I mean, the other side of the coin now is, and I'm definitely not worried about the medical industry going under. Big pharma is a whole nother topic. But when you sit here and look at it and you think about it, there's no recourse. There's now no incentive ever to pay your medical bills.
Well, so
think about that.
This is not going to stop those folks from calling you if you owe $14 and a missed copay. They're going to be
about it. If
rapidly, yeah.
But what? Okay, I owe $2,000 because I had to go to the ER for stitches. I don't care.
They're going to get. My sense would be that the hospitals for the $2,000 and up are going to beef up their legal teams, because those are debts that are owed. And I believe that the lower balance collection agencies will likely get nastier, which will involve the CFPB coming in and doing more enforcement on, unfair credit collection practices and threatening people. Because
and let me say, like, I'm not sitting here condoning go get surgery and then not pay your bill. Okay. If you owe something, pay your bill. Don't be that guy or that girl. Okay. If you owe it, you pay it. That's the deal. But there are going to be people who look at it through this lens of, okay, I owe you money. Well, big deal. Guess what? CFPB says you can't report it to credit. You can call me all you want. I'm just going to block
it. Doesn't matter to me. You can call me all you want to and threaten me all you want.
I just wonder what the recourse is and what this looks like. And it's going to take a minute to see the sample size, but how many collections even get paid, right? Like, that's the other thing when you look at it. The what'd you call them, Fox collection? Like, they're buying $1,000 debt for $40. Right. I mean, that's all they're doing. And then the medical side is just writing it off as bad debt, lost income. That's how they're going about it with their taxes and the
tax
IRS.
write-off, right?
Yeah. And then Fox is turning around going, hey, you owe $1,000, when they know you're not going to pay it. If you called them up, they'd settle with you for a few hundred or something like that. And then they make money, and that's how the world spins. But I do wonder how that affects percentages and numbers and,
Yeah.
what it looks like over the next, what do you think, 12, 24, 36 months? Just kind of the
It's a good
slow impact of
question.
this.
I think all those losses have probably already been built into pricing into the system, and probably not too worried about it. The folks at the collection agencies are going to have to address this in a different way, though, because
Do you
they're
think they
not.
pay less now? I would pay less because
I
you can't
wouldn't.
report
I
it.
wouldn't pay as much. That's for sure.
Yeah.
Yeah, and some of them will get nastier, and some of them will get nicer. And maybe they put the good cop team and the bad cop team in the same company.
Put you on a payment plan, $5 a month for 2 years.
That's
You get
right.
paid off.
Yeah,
Yeah.
it'll be interesting, but all of that speculation. I think it's a good thing for the mortgage industry, and it's a good thing for mortgage customers.
I agree. No, overall, it's a good thing. It helps the housing economy. I think the lift and the help that it will have for housing and for people wanting to buy an asset far outweighs what was
Big.
probably not getting paid anyway
Yeah.
from a collection side in the medical field. So
Right.
I'm not
Right.
saying that it's right. I'm not saying people shouldn't pay their debts, but the reality of life is that they don't get paid a lot of times. So I think this will be a lift and actually could help the economy overall a little bit more. So props to the government on this one for getting it right. Yeah, I think CFPB did a good one here. All right, that'll do it for us. Follow us on the channels. Appreciate everybody. Make sure you like, subscribe, download, share, hit the bell, comment, whatever you got. What do you think? Is this a good thing? Is it a bad thing? Is there a topic here or a spin or an angle that we didn't really discuss on this? Because this is one that's interesting, and it's a good way to kick off 2025. If you had medical collections, by the way, and you did on your credit, you should reach out to myself or Zach and ask us to look and see, what did that do to my score? Where am I at now? Has it fallen off yet? Is it going to take a couple of more weeks? Like, when is it? And what does that do for me? And what position does that put me in? Because again, there may be savings or opportunities right now that you didn't realize that all of a sudden have fallen in your lap.
Right.
So fun show. All right. That's it. We'll be back next week with more Than Mortgage. Take care. Have a great rest of your week.
See you then.